Hi everyone. So we are going to start with direct taxes revision lectures of all the important concepts as made applicable for May 23 CA final examinations, and these lectures till half means at least till up to return filing concept in 139, okay, and some other basic income tax authority section, maybe till section 144 base judgment. All the topics which I deal for CA final in this revision is equally applicable also for CA inter. CA inter students also can happily listen to these lectures because of one reason, that the concepts which I am going to cover may have an in-depth discussion of certain concepts which are not that much asked in CA inter, but still it is not bad to learn the things which are not at the range of CA inter but they're in your syllabus curriculum. Say for example, residential status concept is there. In this revision lectures I cover residential status also, but what areas of residential status I will cover? Residential status of a non-resident related issues I will cover more in depth. That means I will cover residential status of a normal resident as well, but more focus I will put on the difficult area like non-resident. Okay, recently one CVDT clarification also have come, so that also we will merge and we will explain in this particular revisionary lectures. These revision lectures will be, time and again I am telling you, it is focused towards examination, where some points I will explain in depth as to the logic behind the bare provisions of law, the intention of the revenue, the case laws inside. Some concepts I will just go through that particular concept and I will explain what is the intention, that's all. Okay, that means you should not expect a 250-300 hours of discussion here. Every topic crisp and clear we need to complete, from the basics of income tax till the international taxation. So all the concepts we have to cover in a crisp and clear way, which will be directly focusing the coming examination for May 23. You have your preparation simultaneously. Whatever the lectures I will upload on the YouTube, completely will be focusing from the exams point of view. Hopefully it covers all your questions as well. Okay, whatever the doubts you generally get while solving the problems or while reading the provisions, hopefully I cover in depth from the bare provisions of law, each and every point in detail. Okay, but no repetitions, and problems also I will be solving if that problem has some important element included. I mean the past exam questions, okay, from the study material. When I say DT, I will absolutely follow the study material, bare act, study material, enough. Okay, because study materials which are prepared at the recent times are having good number of questions inside. Okay, so the bare provisions of law, analysis in my book, the problems taken from your study mat. Sometimes your study material may not contain certain questions. Say for example, the first chapter which I am going to take is the basic concepts, understanding the previous year, assessment year, and connected sections to that, like section number 172, 173, 174A, 175, 176. Okay, so these set of sections. Okay, I will be linking this with section number 44B, PGBP. So there is a lot of bare act intention that will be definitely be analyzed in these lectures. But before I start with this, first I want to make it very clear, I am Koushik Mukhesh. Never you can separate me from the bare act. So I am telling you once more and one again time that these lectures will be time and again focusing absolutely on the bare provisions. Okay, the bare act, interpretations, analysis, case studies, I mean the case laws, and past exam questions. I will be ensuring that all these are covered in a short time of around 15-20 minutes for each concept. Say for example, I take a concept on, example sake I am telling, if I take a concept on section number 32, depreciation, I will try to cover all these concepts, whatever I said, the bare act, main intention, the analysis, Everything I will try to cover in just 1 hour to 1 hour 15 minutes, entire depreciation 32, including the additional depreciation along with the recent amendments that were brought on. So I will ensure that all important concepts will be covered, including assessment of trust, because in my office we do lot of work on trust. So we are literally to tell we are experts in doing the trust assessments. So trust I will take. I mean, when I say trust, not just a charitable trust, I'm talking about REITs, business trust, every single thing, securitization trust, everything, trust, anything carrying the name trust. Okay, so therefore I will ensure that we will be covering out all important concepts from the exam's point of view. Okay, next issue. When it comes to the assessment procedures, every single minute point, if we try to cover it, will cross number of hours. From exam's point of view, I will be covering number 1, the returns filing, 139 till 155, 56, 156. I will cover everything. After that, I will cover appeals and revisions. Later, I will go to the penalties, because there are a lot of case studies that have come. Supreme Court rulings have come on the penalties chapter. So, penalties. Okay. So, like that, some important provisions are there. Next, we will go into double taxation avoidance relief, DTAR. There we will be understanding the concepts of tax management, tax planning. These questions are recently also asked in your examination. So differences between tax management, tax planning, tax avoidance, tax evasion. All the concepts we try to analyze in depth in these particular classes. So areas which require a lot of focus, I will also show a lot of focus on those areas, like DTAA especially, because DTA underwent some important amendments in the recent times which require some focus. Okay, so in the outset, these classes are applicable for final or inter means. Half the lectures are applicable for inter as well. Okay, when it comes to capital gains chapter, maybe the way in which I deal at final level may change, but concepts applicable for final are equal applicable also for inter. So if you listen to these lectures, definitely CA inter students I'm talking about, these are more than enough for your examinations. For CA final, these are exam oriented. Okay, so what are the important focus areas? Cost of improvement of an amendment has come, that I will cover with an illustration as well. Okay, so let's focus on these revisionary lectures from the bare basics. Okay, so basics lecture, the first lecture on this, I will be covering out in 1 hour to 1 hour 15 minutes. Don't underestimate the basics. 3 times exam questions came. No surprise if the 4th time is your attempt. So therefore don't underestimate any chapter. Let's cover everything in detail. In detail represents in detail from the exam's point of view. Okay, my in detail means it will go to 300 hours. I'm not talking about that. Let's focus on the examination coming forth for May 23. Okay, so let's start with these lectures. And this is the first lecture on direct taxes or income tax from the exam's point of view, which covers the basic aspects. So what are all we are going to cover in this lecture? Number 1, what do you mean by a previous year? Second one, what do you mean by assessment year? Number 3, can a person have different previous years for one assessment year? Number 3. Number 4, whenever the assessment of income has to be made, it will be made for that particular previous year. That means, simply to tell, this year we will pay the tax and assess our income not for this year's income, we will do that for the previous year. Logic is very clear. Logic is very clear. We always follow financial year. We always follow what year? Financial year. When the financial year will start? 1st April of every year. When it will end? Coming the following 31st March, we will be completing the financial year. Clear? So the problem is, when the year itself is not completed, how can you assess the tax for that year and pay the tax? Therefore, we will wait for completion of 1 year. Let the financial year get completed. From 1st April to the following 31st March, let the year gets closed. After that, we will assess the income of the previous year in this year. The year in which you are assessing the income is called as an assessment year. The year for which you are assessing is called as a previous year. This is not the definitions given by Income Tax Act, general meaning as to how to understand these. So you will pay the tax For this assessment year, in this assessment year, you will pay for the previous year. But it has 5 exceptions. Those are tested in exam. Yes, 3 times those are tested in examination. That will be our focus point. Knowing about what is assessment year previous year is not our agenda. That also I will discuss just in 2-3 minutes. But our focus point is not previous year assessment year. Our focus is on exceptions to this previous year. What are all? Let's try to understand clearly. See the screen. Point number 1. Learner chapter 1. Chapter 1 this is a learner 1. Chapter 1 learner 2 will also come. That will be our next video. Okay. So these are the topics that I covered. Bare Act I will not read and waste your time. Okay. Take it easy. I am not going to waste your time by reading the Bare Act in class. No. If you want, you read later. I will share this PDF. If you want, you later read it. I don't deny. But don't expect me to give analysis on each and every point inside the Bare Act. It takes a lot of time. So therefore, let's focus on the main contents. First one. Definition of previous year. Definition of previous year. First one. Definition is defined in section 3 here. 3 defined previous year, not definitions. Section 3 defined it. How? For the purposes of this act, previous year means represents a exhaustive definition. Okay. Means the financial year, very important. There is no concept of opting for a different year. Always assessment of income under income tax happens only for financial year. I repeat once again, previous year means the financial year. Means you don't have a choice of opting for an alternative year. Previous year means a financial year immediately preceding the assessment year. Immediately preceding what? Assessment. So there are 2 years that we need to consider. How many years? 2 years. 1. Assessment year. 2. Previous year. In the year of assessment, okay, we will assess the income of the previous year, which is a financial year, and we will pay the tax. This is a general tendency. Am I clear? So tell me, one person, Koushik Mukhesh, will have how many previous years? You can have multiple previous years also. Chance is there. Sir, how come, sir? Single person have 2 previous years. Possibility is there. It's not 2 previous years. It is 2 previous years of source. It's called as 2 previous years of source. Sir, where it is said? Section 3 la proviso they have said. Let's read. Provided that means, however, in case of business or profession newly set up or a source of income newly coming into existence in the said financial year, they use the word newly set up, newly coming. Okay, you set up your business or profession newly or coming into force when in the said financial year. The previous year shall be the period beginning with the date of setting up of business or profession. Means previous year will not start with the 1st April. It starts from the date of setting up of your business or profession or new income coming up, ending with the said financial year. Means Koushik Mukhesh is a professional. Means I am a chartered accountant. Comes under professional category. I am having my practice from 2012 onwards. 2012 I qualified, from then I started my practice. From 2012, this is 23. 10 years also completed. Now you should understand clearly. 10 years I am already having one source of income, profession. Okay, I am also in teaching, another source of income. I was into consultancy, another source of income. Say for example, I entered into movie field. Example. Okay, I entered into movie field. Say for example, I went for a story writing. Okay, story writing or editing or acting, some sort of movie field I entered. Now I am having a new source of income coming in. Now, in the year 23-24 financial year, okay, which year? 23-24. Say for example, 23-24 financial year. Say for example, on 10th April 2023, I entered into movie field and received my first check. 5 lakh rupee check I received. Okay, I received my first check for a movie. Okay, say example. Now you should understand, I entered into movie field. So there I received my first check for a new source of income on 10th April. Now the question is, my existing source previous year will start from 1st April ending with the next year's 31st March. But a new source has started during this particular 23-24 na. This 23-24 income will be assessed in 24-25 year. For that year, I will have two previous years. One is previous year for existing source. Second is previous year for a new source. Existing source, my previous year will start from 1st April to 31st March. For the new source, my previous year will start from 10th April to 31st March next year. This is the summary of the entire discussion. Beyond this, I can't explain in this revisionary lectures. Hope you understood the concept. Okay, so this is a regular material only, not fast track material or revision material. I analyzed each and every bit and piece inside the concept, but I don't expect me to repeat all these points and waste your time. But I will first explain in a summary way. First, definition of previous year is exhaustive. Next, meaning previous year is a financial year. Means what? If it is any calendar year or any year you want, not possible, financial year only. Sir, from when it started? Maybe. Sir, these are all facts which you may know, you may not know. Okay, do you know will be there na? In newspapers. Like that, this is do you know. In income tax, there are lot many do you knows. So, the concept of previous year must be financial year started from 89 and 90 only. That means previously before 89 and 90 assessment year. Assessment year 89-90 means previous year 88 and 89. Then from then only this concept of mandatory financial year started. But previously before that there is only a concept of whatever year you want you can adopt. 10th July to 9th June, 10th July to 9th July next year. Like that also people used to follow. But now this concept is not there. Must be a financial year. But the fun part is the term financial year is not defined anywhere. Income tax law they didn't define. But what is a financial year? General Clauses Act has applied, which is defined to start from 1st of April, ending on 31st of the March of next year. Next, this is one important MCQ type question they can ask. Financial year for income tax versus books of accounts. Now the question has arisen. Okay. I am preparing my books of accounts. I am preparing my books of accounts from Jan to December basis. Means financial year, not a financial year, not a financial year. Possible? Can you maintain books of accounts for other than a financial year? It is possible or not possible? Clearly he said that previous year means a financial year. Therefore, books of accounts cannot be prepared for any period other than financial year. Like this, you should not think. Books of accounts can be prepared for any period, but assessment of income, payment of income tax, chargeability of income tax, when you come to the income tax purposes, then only, then and only then financial year will be taken as a base. My dear friends, everyone remember please, books of accounts can be prepared for any period, but tax related situation if it comes, financial year is the base. Okay, that's another point I kept here. Once I complete, I will give 2 minutes time, I will put it before you. You can easily see and understand. Proportionate previous year. There must be either a newly set up business or profession or a new source of income that comes into existence. In such a case, the previous year shall start with the date of setting up of business or profession and end with the said financial year. End with the said financial year. Hope everyone understood the concept clearly, right? Next. Therefore, the first previous year can have less than 12 months in it. But from the second and subsequent years onwards, the period starting from April 1st of a year to 31st March of next year shall apply. But in no case previous year can have more than 12 months in it. I repeat once again. First previous year. Which year? First previous year. For example, I am not having two sources here. I completed my CA today. Tomorrow I am starting a new business. Tomorrow is 1st April. Tomorrow is 3rd of February. Okay, 3rd of February I started. Now what is the financial year for me? My financial year, my previous year will not be the complete financial year. It will start from 3rd Feb ending with 31st March. Immediate 31st March. Okay, so financial year need not be always from 1st April to 31st March. This is an exception. Hope everyone understood this exception now. Okay, where an SSE already having an existing income source, say house property income, and a new source of income comes into existence in the form of business, such SSE will have 2 previous years for the assessment year, namely financial year for existing source, period starting from new source to end of financial year for new. Okay, next, an example for this. And my dear friends, I am telling you again and again, every question after, every topic after, I kept one illustration. Okay, how those illustrations? Those illustrations are taken from various sources. Okay, from the Bayer Act. Okay, from the Bayer Act, good author books are there. Okay, I'm not talking about CA authors. I'm talking about normal income tax. Rajaratnam's book is there. Income tax Supreme Court module released by Mr. Rajaratnam. A bundle of 7 books will be there. So which we use in our office. From their good illustrations. Okay, so I use it to compile. Okay, I am openly admitting it. Koushik Mukhesh don't prepare anything. Okay, I interpret law. I read law. I understand law. I explain law in its main sense. The beauty of law should come out when we teach. That's all. That's the only intention. The sources from which I gather my resources. Okay, I will be taking the complete resources. I mean, the problems are some compilation, good amount of problems. I take from Vinod K. Singhania sir's book. I will be taking from Vinod Gupta sir's book. I will be taking some from, Ahuja sir's book. From various sources. I will be compiling good amount of problems which are really good for explanation, and I will put it before you in my explanation way. I am openly saying that because when examinations are nearing for you coming up in May 23, our intention is to get passed. Okay, you should pass immediately. Okay, clarity should come in your thought process. Therefore, wherever I find one good problem, I will be taking it, I will be putting it before you, and I will be explaining. Okay, credit should go to all great faculties in India. So I am talking about Vinod K. Singhania sir's booklet, some problems I have taken. Mr. Girish Ahuja sir's booklet, some problems I have extracted, some amount of problems. That means to explain the provision. Okay, because everyone should have one source from where we can understand. Bayer Act will be taken from the Parliament edition. That I will understand. Illustrations to make it more simple. Some illustrations I will create and I will put before you. Then I will write self-made illustrations. Some I take from ICAI. Some I take from Vinod Gupta sir. Some I will be taking from Ahuja sir. Some I taken from Singhania sir. Various books. And it's none of our business from where these problems have been extracted, from where I looted all these. That's none of your business. So mainly our focus is to understand. Okay. So that let us focus properly. Let's see. KMR Limited maintains books of accounts on a calendar year basis. You maintain, no problem. And information with respect to its income is as follows. Calendar year 2020, calendar year 2021, calendar year 2022. 3 calendar years I have given you. Income as per the books prepared on calendar year basis. Sir, calendar year basis, if you prepare the books, can we bifurcate for financial year basis? Yes, you can. How? Take from March, for example, I gave you books of accounts for Jan to December. Next year also Jan to December will be there or not? You do one thing. From Jan to December you take only starting from April. April to December you take. Next year also will be there. Na? There Jan to March you take. It becomes a financial year. So I gave a breakup. It's very easy to break up as well. So calendar year 2020, income as per the books, 5 lakh. quarterly breakup. Jan to March 1 lakh, that means 2020 calendar year la Jan March 1 lakh, April December 4 lakh, 2021 la 10 lakh, 2 lakh and 8 lakh, 2022 la 15 lakh, 5 lakh and 10 lakh. Okay, my books are prepared on calendar year, but assessment has to happen on a financial year basis. Okay, so from the aforementioned information, calculate the taxable income under Income Tax Act 1961. Under Income Tax Act 1961. So my question is very simple now. As per the books, income is different. As per the income tax, assessed income will be different, because I will assess the income on financial year previous year basis, but books are prepared on a calendar year basis. Now how to deal with this has become a important question. Okay, let us try to understand clearly in detail. See here. First, if you take 2021 calendar financial year, 2021 financial year, if you take 2021 financial year, if you observe clearly, this is 21, means Jan to December. Okay, Jan to December. Which financial year we want? 2021 financial year we want first. 2021. See here. 2021. 1920, like that I have given. Okay, see the screen. If the assessment year is 2021, previous year will become 1920. Previous year will become 1920. In the first calendar year, if you observe 2020, Jan to March 1 lakh, April to December 4 lakh. April to December 4 lakh. Previous year 1920. 1920 previous year means how many months only is pending now? 3 months. Why? Assessment year 2021, you will assess the income for the previous financial year being 1920. 1920 will start from 1st April 19 ending with 31st March 2020. 31st March 2020. Here this is from Jan to March 1 lakh. That means let us assume it is a new source created, very new in 2019 year only, 1920. 21-22 assessment year, 2021 will be the relevant previous year for that. Okay, 2021. 2021 means it will start on April 1st, 2020, ends on 31st March 2021. So, okay, now see the screen clearly. 2020 1st April to 31st March. Okay, first 2020 1st April to 31st March. How much? Up to December. How much? 4 lakh. Plus the very next quarter 2 lakh. Totally how much? 6 lakh. This is how you need to understand. So April 1st to 2020 to December 31st 2020, 4 lakh income. 1st January 21 to 31st March 21, 2 lakh rupees. Totally how much? 6 lakh. 22-23 assessment. Previous year will be, okay, previous year 22-23 na. So previous year will be 21 and 22. 21 and 22 means 21 la 8 lakhs, 22 la 5 lakhs. 8 lakh and 5 lakh, 13 lakh will be assessed to tax. This is how you need to understand. Clear? So hopefully everyone understood this illustration as well. Okay. So illustrations, some are self-made illustrations, some are illustrations taken from good books wherever possible. In my research, I read so many books on income tax. Some are taken from Rajaratnam's Supreme Court edition is there. From them, I have taken some from Vinod K. Singhania's book, some from Mr. Girish Ahuja's book. Like that, good amount of books what I read from there. Whenever I found that no past exam question is asked in that area, if it is asked, how it look like? That's why I have taken this. Okay, if some questions have already come in this examination, I took same question. Some backing of question is not there. For them, I have taken illustrations. This was taken from Mr. Rajaratnam's Basics on Income Tax. Rajaratnam book you can see on Amazon as well. 7 editions will be there totally. In that basics, I explained this. Okay. So anyway, hopefully everyone understood the concept. In examination, if at all he ask a question on books of accounts prepared on calendar year or any different year, but assessment has to be made. First, we need to know the breakup. What do you mean by breakup? Breakup as per financial year and or quarterly breakup. At least you have to give. Okay, Jan to March, April to December. Like that, he broken everything such that we can easily take the income of that particular financial year. So hopefully everyone understood the first point here. So the entire summary is you prepare books of accounts in whatever way you want, but have the breakup of your income. Okay, for which quarter, which sort of income you are getting, and which how much amount you are getting. If you have control, if you have a books prepared in that way, then you can bifurcate and assess the tax for that particular income. So this is how we can understand the concepts clearly. Hopefully you understood the idea behind this concept, right? If you have any kind of doubts, put in the comments. Next, what is the second one? The second one what we are going to deal is having an extra source of income coming. Okay, new source of income coming into existence. How? Let's see. X joins an Indian company on 23rd August 2021. Prior to 23rd August 2021, he is not in employment. He does not have any other source of income. What are the previous years for assessment year 22-23 and 23-24? This question is a self-made illustration I made. Why? How can I understand? August 23rd is my birthday. So therefore, I have taken that and explained there. Okay. So let's say, for example, X joins an Indian company on August 23rd, 2021. Prior to August 23rd, 2021, he is not in employment. Okay. So, okay. He does not have any other source of income. What are the previous years for the assessment year 22-23 and 23-24? Now tell me. Assessment year 22-23 means which financial year it is? 21-22. 22-23. Okay. So 21-22. August 23, 2021 means it falls under 21-22 year. What is the financial year? 23rd August 2021 to 31st March 2022. This will be less than 12 months period. Okay, this is your previous year. This is your previous year, first previous year. Once this year is completed for 23-24, 1st April 23, sorry, for 22, ending with the 31st March of 23, a period of 12 months will be taken up. Clear everyone? Next. This is one person creating a new source who don't have any other source of income prior. I will take a third illustration now. Let's take a third illustration. The income of X comprises of only property income up till March 10th, 2021. On 10th March 21, he starts a new profession as a chartered accountant. From the data given below, find out the taxable income of X for the assessment years 2021 and 22-23. Means 2021, 21-22, 22-23. How many years? 3 years we need to calculate. Clear everyone? Okay. Property income 42,000 every year. Professional income 69,000 from March 10, 2021 to March 31st, 22. Out of which 10,000 is for the period ending 31st March 2021. Fantastic question. This is how they can ask a question in your exam. Inter or final, leave it off. They can ask a question in this way. First point number 1, the endangering situation is your eyes automatically will fall on the answer. So let me first cover this. Don't check the answer. I will give you a minute time. Try to solve this. Dead easy question. Just some presence of mind. Okay, completed. Okay, let us see the answer now. Sir, first point, before you see the answer, first thing, my income comprises till 31st March 21. 31st March 21 means the financial year is 2021. Okay, financial year is 2021 financial year. Okay, 2021 financial year. Okay, now up to 31st March, sorry, up to 10th March, my only source of income is property income, means rental income. Now he became a CA. Later he started his practice as well. Now he is asking about what will be my income. Okay, what will be my income, the corresponding previous year. First you need to tell what is the assessment year. Next you need to tell the corresponding previous year. Next you need to tell how much income is accessible to him. Okay, a very good 4 marks question they can ask. Let's see the answer now. So please see here. First, how many sources of income I have? First tell me that how many sources of income are there. Existing source is rental income. New source of income is professional income. 2 sources. Total income I calculate. Okay, how much? Total income. Okay, now first he is asking, you should assess the income for 2021, 21-22, 22-23. How many years? 3 years. Okay, now see here. Assessment year 2021, previous year will be 1920. He clearly said up till March 10th 2021 only property income is there. Means what? It is there since long past till 31st March. After 31st March, along with this, new source has been added. From this, what is the logic that you need to understand? For assessment year 2021, previous year will be 1920. 1920 he used to have only one source of income, and that source of rental income. So the rental income is the only source of income that he has up till 10th March 2021. Means in the 1920 also he used to have that income. So 42,000. Next, assessment year 2021 also he will be having that income. So another 42,000. Third year also he will have 42,000. Professional income start from which date? Professional income has started from 10th March 2021. One important observation. New source of income came in which year? 2021. Okay, means it falls under 2021 calendar year. Financial year. Okay, so first one, for assessment year 2021 assessment year, previous year will become 1920. Professional income is not available. Okay, not available. 21-22 assessment year 2021 will become, but for the 2021 10th March to 31st March, that 21 days income only should be taken up. That is 10,000. Who has given? Question only has given, out of which 10,000 is for period ending 31st March 21. And third is normal professional income, 69,000 minus 10,000, 59,000. That's the third source. We added all these things. This is how the income will be assessed. Okay, so now what we learned? New source of income when it comes into existence. 3 different types of questions I kept in my book. Number 1, books of accounts, how to use to break up and put it on an assessment basis. And second one person who don't have a source of income created a new source. And third one is a person who is already having an existing source had a new source. Now how to calculate corresponding previous year and how to assess his income. Okay, remaining notes I will share. You can directly have a glance over it directly by seeing what is an assessment year. What's a assessment year? Okay, now assessment year means period of 12 months commencing on first day of April every year. So previous year means a period of 12 months. Clearly he said previous assessment year. Assessment year means a period of 12 months commencing on the first day of April every year. Okay, that means always assessment year must be 12 months period. For the 12 months period, for that assessment year, the previous year, the immediate previous year will be taken. That means assessment year, name is very clear. Assessment year, name is very clear. This is the year in which assessment of your income will be done. Period of 12 months. Okay, next. First, This is very, very important for your exam. Multiple times questions have come. Okay, multiple times questions have come. So therefore, I will summarize everything and I will explain. I don't waste your time. 2-3 questions if you understand. For example, 172 read with section 44B I will discuss first. Okay, after that I will go to assessment of persons leaving and AOPs and BOIs and likely to transfer property and discontinued business. All these points I will summarize. Okay, but 172 read with 44B, if you can understand that particular area clearly, remaining 4 sections are there now: 174, 174A, 170, 176. Just like that, in a cakewalk you can complete. So the modus operandi of 172 is very important for us. Clear everyone? So let's focus on that. So what is this concept we are going to discuss? Generally, income of this year will be assessed to the tax in the very next year. Okay, example. This is a financial year. This is the financial year 22-23. Okay. This year is a 22-23. Say for example, Mr. A earned a professional income of 50 lakhs during this financial year. When he has to pay the tax, I'm not talking about advance tax, TDS deductions. Okay, I'm not talking about those. I'm talking about assessment of your income. Means computation of total income. Okay, depositing tax with the department. All those things. I'm not talking about TDS advance taxes. Originally, the computation statement, filing of ITR returns, everything you will do in this year, very next year. Which year? Financial year. Okay, so I will explain this way. Assessment year will be a period of 12 months. Starting from the 1st April, he said. Means it will be a financial year again. Okay, from 1st April, if you take, indirectly they said, assessment year means a period of 12 months, commencing on 1st day of April every year. How to understand this? Take 1st April first. From there 12 months you take. Automatically it falls under financial year. So don't ask me a question. Sir, assessment year is a financial year or normal year? It is a financial year. How? 1st April it starts with 12 months period. Obviously it will stop by 31st March of the next following year. Financial year again. So there are 2 financial years here. Number 1, the financial year in which you earned the income, the financial year in which you assess your income and pay the tax. So therefore, generally 2 years are twins, which attach as conjoined twins are there. You can't separate them. It's how it move. But exceptions are there. Generally, previous year's income will be assessed to the tax in the very next following year. We call it assessment year. But there is a good exception for this. That exception has been provided in 5 sections, read with another section 44B. Number 1, 172. 173 is deleted, section 174, 174A, 175 and 176. In these sections, exceptions to the assessment year to assess the income of previous year is provided. Listen to my language. In these 5 sections, listen from now. Exceptions to a rule that assessment year will assess the tax of previous year is provided. Means generally in an assessment year, we will assess the income of previous year. That exception is there in these 5 sections. Means this year you are earning a revenue or earning income. Yes, this year only you have to pay the tax. Don't wait or defer. Postponement till next year is not available. In what? In these 5 cases. So today I am generating revenue this year only you have to pay the income. File the returns accordingly. Why? What is the need? Let's try to understand. First one, shipping business of a non-resident. So this is a Bare Act provision. Okay. Selected provisions only I have taken again. All the subsections I didn't put and waste your time. Subsection 1, 2, 3, proviso, and subsection number 7 and 8. Let us first read the Bare Act. Okay. First, see there. The provisions of this section shall, notwithstanding anything contained in any other provisions of this Act, the golden words start here. Notwithstanding represents ignoring, notwithstanding anything contained in any other provisions of this act, ignoring other provisions of this act. This section shall apply for the purpose of levy, not only levy of tax, recovery proceedings also will start in case of any ship. First one, it's a shipping business, very good, belonging to or chartered by a non-resident. Definition of non-resident next lecture I will explain. So next lecture we will be discussing about residential status. Okay, there we will focus counting dates, all those things also we will do, but focus is not on that. That's IPCC focus. That also I will cover, but I will cover only one illustration on that. Main focus will be on non-resident related concepts we will be focusing, which is very important for CA inter as well as for CA final. Okay, so now listen carefully. First, when this section will apply, first we need to know the applicability. Okay, see here, sir, not to exaggerate, but listen, notes was prepared with ultimate precision, made it absolutely perfect. Okay, so made it absolutely perfect, as easy as possible for a reader to understand. So you read, you can only understand this, but one small request, after listening to the lecture, when we complete everything here today in this lecture, please put your comments in the comments box as to how the lecture is and how the notes is and what is the level of your understanding. These three, if possible, you please make a comment. It motivates us also, because when I shift from one subject to another subject, which I love the most, but existing faculties are there in the academies where I teach. I didn't take income tax previously. Okay, but it is one of the most lovable subjects for me. So that motivation is really acting like a catalyst for us. So please put your comments in the comments box as to how you felt about the lecture and the notes, and what is your level of understanding, whether you understood, whether you learned some new concepts or not. Please put a comment. Okay, so anyway, let's start. First one, the provisions of this section shall, notwithstanding anything contained in other provisions of this act, apply for the purpose of levy and recovery of tax. That means, though you are a non-resident, I will recover the tax from you as per the provisions applicable under the income tax. Though you are what? Non-resident. How that happens? Let's see. So for the purpose of levy, and second one is the recovery of tax. Levy of tax, recovery of tax. In case of a ship belonging to or chartered by a non-resident, belonging to a non-resident or chartered by non-resident. Chartered means owned by him or taken by him, which carry passengers, livestock, mail or goods shipped at a port in India. These are all important conditions. Condition number one, there must be a non-resident. He should own a ship or charter a ship. Third one, that ship should carry passengers or livestock or mail, post, etc. goods shipped at a port in India. Okay, so those passengers, those livestock, that mail or goods should be shipped at a port in India. Okay, somewhere shipped through India it should not go. Origin should be in India. Okay, number one. Next, where such a ship, which ship? Ship carrying the passengers, livestock, chartered or belonging to a non-resident, shipped at a port in India, such a ship, carry passengers, livestock, etc. 7.5% of the amount paid or payable on account of such carriage to the owner or the charterer or to any person on his behalf, whether that amount is paid or payable in or out of India, shall be deemed to be income accruing in India to the owner or charterer on account of such carriage. Before the departure from any port in India of any such ship, the master of the ship shall prepare and furnish to the assessing officer a return of full amount paid or payable to the owner or charterer or any person on this behalf on account of the carriage of all passengers, livestock, mail or goods shipped at that port, since the last arrival of the ship thereat. provided that where assessing officer is satisfied that it is not possible for the master of the ship to furnish the return required by this subsection before the departure of the ship from the port, or and provided the master of the ship has made satisfactory arrangement for filing of the return and payment of tax by any other person on this behalf, assessing officer may, if the return is filed within 30 days of the departure of the ship, deem the filing of return by the person so authorized by the master as sufficient compliance of this subsection. Very important. Subsection 7. Nothing in this section shall be deemed to prevent the owner or charterer of a ship from claiming before the expiry of the assessment year relevant to the previous year in which the date of departure of ship from the Indian port falls, that an assessment to be made of his total income of the previous year and the tax payable on the basis of the basis thereof be determined in accordance with the other provisions of this act, and if he so claims any payment made under this section in respect of passengers, livestock, mail or goods shipped at Indian ports during the previous year shall be treated as a payment in advance of tax leviable for that assessment year, and difference between the sum so paid and income amount of tax found payable by him on such assessment shall be paid by him or refunded to him as the case may be. For the purposes of this section, the amount referred to in subsection 2 shall include the amount paid or payable by way of demurrage charge or handling charge or any amount of a similar nature. This section was tested for around 2 times in exam. In the recent RTP, again I found this. Okay, so first point number 1. Forget about fast track revision, leave off. Important means it is important everywhere. Okay, first I will give you 2 minutes chance. I request everyone, please read subsection 1, subsection 2 and subsection 7. Okay, 2, 1, 2 and 7. Nothing is required. 3 is just a return filing concept that I will explain in 1 minute later. Read 1, 2 and 7. Okay, please. Honestly, please everyone read 1, 2 and 7. Completed? So first, listen carefully. Idea of this section is very clear. The intention of the revenue is, whenever there is a non-resident, that too which kind of non-resident? Non-resident who don't have a stable source of income in India. Example, if a non-resident is there, that non-resident is having a land and building in India. Rent is generated. Okay, he may escape paying the tax on that rental income. Maybe chance is there. The rent is 1 crore per month. 12 months na 12 crore. That non-resident should be taxed at a rate 5 lakh 12,500. Remaining tax rates will be deciding that. So tax rates are already given. According to that tax rates, we will pay the tax. Sir, we can understand that. Now, if we escape paying the tax, if that non-resident who is having a rental property in India, getting good amount of rental income, escape paying the taxes, what will happen, sir? What great thing will happen? So what great thing will happen here? I will seize this particular property, recovery proceedings under income tax will start, attach the immovable property in India, from that we will recover the tax. Answer is very simple. But the problem will come in this way. If that person is a non-resident, not having any stable income source in India, such stable, unstable means not revenue point of view, asset point of view, the generating source point of view. The revenue is generating from what? From what you are getting income in India? I am getting income in the form of freight. Carriage means freight here. This section is concentrating on a revenue or income coming to the non-resident in the form of collecting the freight charges for carrying the goods belonging to some other person where I can't seize them. For example, if the property is my property, seizing it has a common sense. Okay, seizing it has a common sense. I am carrying the goods belonging to some other person. If you stop it, their goods may sometimes have deterioration stage may come, or they may be subjected to speedy decay. They may be perishable goods I am carrying on. Okay, passengers and livestock, if you stop them, they will die inside. Therefore, I am in a sensitive situation where I can't stop the ship and I can't even postpone the taking revenue or a tax on revenue that he is collecting, because he is charging freight from them. Okay, he is charging freight from them, getting income on in the form of freight. He is going out. Two problems will come. The source from where you are getting revenue is a unstable source. It's not that much stable. It's an unstable source. So the source is unstable where nothing belongs to you but revenue is generated. Therefore, income tax authorities also got a doubt. The lawmakers also have got a doubt. If I leave him, he will go to USA or he will go to UK or some place he will go. What is the guarantee that he will pay the tax on this freight income he collected? There is a doubt. Therefore, they said that non-resident, when you are leaving on a ship, either belonging or chartered by you, carrying the passengers, livestock, etc. When I am using the word carrying, I am charging freight. Freight here does not mean only freight. It includes a demurrage, handling charges and any other amount related to the freight. Clear? Therefore, department is also worried as to how to collect tax from these kind of people. Therefore, they said, non-residents, you are having a income in India? Yes. In the form of freight? Yes. Chartered for a ship by you? Yes. Carrying passengers, livestock, mail, goods, etc. in India? Yes. You do one thing. The time when you depart from India, pay the tax and leave. So tax on what? Tax on income. So the problem is we need to give some tax collecting mechanism for them. They said the time when the ship is departing from India, pay the tax and then leave. Without paying the tax, you cannot leave from India, except under one exceptional situation. That's what they said here in the proviso. Okay, so that I am not going to discuss now. Let us first understand the modus operandi of this entire concept. Okay, so the concept is, whenever there is a non-resident owning a ship and carrying passengers, livestock, goods, mail shipped in a port in India, that person collecting freight is an income for him. On that income, he should pay the tax. How much tax and how much income I should pay, or what income, on what income I should pay? So they said that you do one thing. You collected freight? Yes. In that freight, the amount of freight, whatever you collected, 7.5% we will treat it as income above all the expenditures you kept. Sir, I didn't understand. Sir, I will explain this way. 100% is your freight collected. Okay, you collected freight means, for what you collect a freight here, you should have a ship, you should have a container which will what to say, load all the goods, etc. Passenger carrying means you should make all arrangements, fuel cost, crew members, captain, master of the ship, so many things you need to plan. All those will be included into the fare of the freight you collected or not. So therefore government said that 92.5% we presume that it is an expenditure for you. 7.5% is your income. 7.5% is not the tax. Remember carefully. I collected 1 crore rupee. 92 lakhs 50,000 will be treated as a presumptive expenditure. How much is the income? 7.5% being 7,50,000. On that 7,50,000, you should pay the tax. How much tax is the next question which will be answered. Therefore, really 92.5% expenditure is there? No. It may be more, it may be less, we don't know. But it shall be deemed as income. Deemed. Legal fiction is created. Though it may be more, it may be less, I don't care. You collected freight, yes, 7.5% will be treated as a presumptive income. Okay, 7.5% of the amount paid or payable on account of such carriage to the owner, okay, or to the charterer or to any agent. You need not pay only to the owner, maybe to the owner or any agent also. For example, I am an Indian agent for him. I am an Indian agent for him. Means what will happen? I will collect the freight. He will not collect anything. Even then, you have to pay the tax in the same way. So what is the summary? Revision lecture, this is enough. But idea must be very clear. And this is applicable for CA Intra as well. So please listen carefully. So the point is very clear. Whenever any non-resident who is chartering the ship, carrying passengers, livestock, mail, goods shipped in a port in India, first on a presumptive basis, 7.5% of the carriage charge including demurrage and handling charges, any other like nature, he will be paying the tax on 7.5% of his income. What rates will apply is the next concept. Let's read subsection number 7. Before going into this, read these 4. Non-resident must be there, owns a ship or chartered, carries on passengers, livestock, mail or goods. Operations may be made by non-resident by himself or even by an agent. If all the conditions are satisfied, 7.5% of the amount of carriage shall be deemed to be the income. The term carriage includes a demurrage, handling charge and any other amount of a similar nature. Okay. Very, 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 very important thing. The provisions of this section shall, notwithstanding anything contained in any other provisions of this act. If it is a DTAA will include foreign treaties inside that. Therefore, I kept notes very clearly. This section shall have overriding effect over all conflicting provisions of this act. However, this section does not override section 90 as it is a separate relief agreement entered into by Indian government with a foreign government. Section covers not only levy but also its recovery. Okay. This is only a procedure involved. Just read and leave. Differential tax regime. Very, 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 very important. That's what the next thing we are going to do. Okay. Differential tax regime. Point number 4. For point number 4, we need to read section 44B. Which section we are reading with which section? Section 172 read with section number 44B. Okay. B. Let's read the provision first. See the heading. Special provision for computing profits and gains of shipping business in case of non-resident. In case of non-resident. Sir, in this section, you didn't complete subsection 7, sir. 1 or 2 completed. 3 is only a procedure leave of return filing. 7, very important, you said you didn't cover, sir. Then what is the situation? 7, we will read with 44B. Okay? 7, we will read with 44B. First, I will explain you the logic of the sections. Later you read. Give me 5 to 6 minutes. I will first explain all the entire idea behind 44B and 172. Later you see this. Later we will do one exam question on this. Enough. You will do any question that comes in exam. Okay? Listen carefully to the point. Point number 1. Section number 172. 172 there is a disadvantage. What is the disadvantage of 172? Whenever a non-resident having a ship, if he is leaving from India with the passengers, etc., by collecting a freight, okay, you may tell, sir, freight is not yet collected, sir, I will collect after reaching. That's none of my business. Payable freight also, you should first assess the tax and you need to pay. 7.5% is the tax rate applicable. Okay, which one? 7.5% is the present income. On that you need to pay the tax. Sorry, okay, keep it aside. How much tax rate, everything we will discuss later, sir. First, let us understand the point. My question is, do this look like something discouraging the non-residents to do business in India? Isn't it discouraging? A person who is having a ship, he come to India, present to basis without seeing my expenditure, you are deeming that 92% is my expenditure. That means 7.5% margin you are expecting in my business. Maybe I may have only 3%, 2% margin like film industry. Am I clear or not? Trading organization, how much business will have here? How much margin they will have? 4% or 4.5% margins they will have. But you are presuming a 7.5% margin you are presuming. To what extent this is correct? Are you understanding or not? So always department should not harass the SSEs. So therefore the problem with this current regime of 172 is it is not really considering the hardships of a non-resident. It is discouraging non-residents to start business in India. Whenever there is a non-resident doing a shipping business by carrying on goods, passengers, livestock, etc., collecting a freight, on a present to basis, you are telling 7.5% is your margin. Really, my margin is only 5%. But you are presuming it is 7.5 and collecting tax. If this is like this, non-residents will be discouraged to do freight business in India. To promote it beautifully, the lawmaker always in law paper also I use it to tell, hats off to the makers of law for their intentional inclusion of certain sections. How beautifully they will place in a garland. Okay, beautiful flowers kept in a garland like that. They keep sections in such a way, it looks so beautiful when you understand it in a right sense. 172 is attached with 44B. 44B is a correspondingly attached section to 172, which says that, are you a non-resident? Yes. Are you doing a shipping business? Yes. Are you collecting freight or carriage? Yes. I will do one small adjustment to this. I will be giving you a differential tax regime. What regime? A differential tax regime. What it is? You are a non-resident? Yes. When ship is leaving from India, you pay tax? Yes. How much is your freight income? 1 crore in Indian rupees. On this, how much is presumed as a income? 7.5%. Means how much is your presumptive income? 7,50,000. 40% is the foreign company tax. 3 lakh rupees you paid tax. Yes, I paid 3 lakh tax. So 3 lakh tax you are collecting means technically his margin is 4,50,000. Who will come and do business with you here? So therefore, government thought that some small tinkering works we need to do. They said, have you paid tax when the ship departed from India? Yes. How much? 3 lakh. Okay. Now, notwithstanding anything contained in this act represents, if you adopt 172 section, provisions of income tax do not apply to you. If this non-resident is having any business loss in India, he cannot set off because notwithstanding anything. Okay, no deductions are allowed. Depreciation not allowed. Not anything of income tax will apply to you. Just shut your mouth, pay the tax 40% on 7.5% income, leave India. That's all. Harassment started. Therefore, they said alternatively, you do one thing. 172 section is a collective regime. Means what? At the source itself, when you generate revenue, immediately pay the tax. Don't wait for assessment here. But 44B, chargeable under PGBP. The beauty of 172 is 172 does not fall under any of the heads of income. It is not salary, it's not PGBP, etc. They don't call it in any way. Just it's a presumptive tax regime. That's why 172 is a special provision. But 44B Bare Act, if you see, they clearly mention deemed to be the profits and gains of such business under the head PGBP. Like that they don't tell in 172. Read the Bare Act properly. So 172 section is not focusing on PGBP, capital gains, they are not focusing on that. Shipping income came, yes, on that presumptively you pay the tax, that's all over. Return has to be filed with the assessing officer by the master of the ship, that's all, game over. Returns also, separate returns have been given to them, non-resident dependent returns. So all about that we will discuss in income tax returns concept. So this is the basic idea. So whenever you apply 44B, what is 44B? Let us understand. Now what is the summary you need to understand? 172 should be read along with section number 44B. Okay. 172 should be read along with 44B. 172 says that pay the tax immediately at the source in which income is generated or deemed to have generated or to be generated in future, but you need to pay the tax at the rate of 40% on 7.5% of the presumptive income. You paid, year completed, assessment year came. Now you do one thing. You are a non-resident, yes. You are having other sources of income in India, yes. Then go for 44B. 44B says that notwithstanding anything contrary contained in section 28 to 43A, in case of an assessee being non-resident engaged in the business of operation of ship, a sum equal to 7.5% of aggregate of the amount specified in subsection 2 shall be deemed to be the profits. Here also presumptively I will tell 7.5% of your income is of the amount collected is income. On that you pay the tax. The amounts referred to in subsection 1 shall be following, namely the amount paid or payable whether in or out of India, to the assessee or to any person on his behalf on account of carriage of passengers, livestock shipped at any port in India. Collection may be made either in India or outside India, irrelevant. But goods are shipped at a port in India. So there also port in India, but here small addition. Amount received or deemed to be received in India by or on behalf of an assessee on account of carriage of passenger, livestock, mail shipped at any port outside India. Sir, what is the difference between 172 and 44B? So many points have come now. So I kept it in the following differences. Beautiful chart. First one. 172 override all the provisions of this act. 44B, 28 and 43A only it will override. Scope covers amount on account of carriage. Covers on account of carriage of port in India only. Here it is in India as well as outside India. Set off and carry forward applicable or not applicable? If you adopt only 172, you will pay ad hoc tax 7.5% income on that 40% tax. Over. Your game over. No set off because notwithstanding anything contained in other provisions of this act. So not applicable. But if you are having other sources of income where there is a set of loss, better you also go for 44B. Okay, 44B except unabsorbed depreciation, because unabsorbed depreciation comes under PGBP chapter, it overrides 28 to 43A. Sir, fastly I am going through. I can explain this provision for 3 hours also, but in 1 hour I have to complete everything. So please listen. Deductions under 80C to 80U. Deductions under 80C to 80U. So deductions not available, but here if you have deductions under 80, you can avail them. Tax liability, foreign company tax rates will apply 40% plus surcharge. Here non-resident tax limits will apply 12,500 for the first 5 lakh, above 5 lakh another region, like that it will be. Okay, so listen, these are the differences between 172 and 44B. Now you may get it out, sir, what is this summary you want to tell? 172 la you will pay tax first. Later, when the year is completed, assessment year will start now. That means this previous year's assessment year will come now. At that time, if you are having set off and carry forward of losses, or you have any other kind of deductions under 80 that you can avail where you can take an advantage of, then go for 44B also. Assess the income as per that provision. If you would have paid excess because of 172, balance whatever excess tax you paid, it will be refunded back to you along with interest under section number 244. Okay. Along with 244 section la interest, they will pay you back the interest as well. Simply to tell, 172 section la whatever the tax you have paid already at 40% rate on 7.5% of present income will be treated as advance tax you paid. Therefore, 44B la assess the income. It came to 1 lakh. I already paid 3 lakh. Excess 2 lakh I paid na, that will be refunded back to you along with interest under section number 244A. By treating this as advance of tax leviable. You listen to entire story now 44B with 172. Now read this bare act, how easy it will be. Nothing in this section shall be deemed to prevent. Okay. The owner of the ship or charter from claiming before expiry of assessment year relevant to previous year. Now you understood na? Ship when it goes na 172 la immediate same year you will pay. Now this year's assessment year came. Now you are having other provisions to come in place. 44B other provision means from the date of departure of the ship thereof be determined in accordance with other provisions of this act means 44B. And if he claims so, any payment made under this section in respect of passenger livestock in Indian port during the previous year shall be treated as a payment of advance tax. Okay, if excess is paid, the difference between sum so paid and amount of tax found payable on such assessment shall be paid by him or refunded. If excess is there, pay excess. If less is there, refunded back to him. But whether to adopt 44B or not, it dependent on the assessee. That's called as a tax planning. For that only chartered accountants are there. Okay. So if you can observe here, summarize everything. Assessee is a non-resident involved in operation of ships. Provisions of 28 to 43A applicable. It should be noted that section 44B overrides the provisions of section 28 to 43A and accordingly other provisions including clubbing of income, set of carry forward of losses, everything is applicable. Following amount shall be treated as income. Very, very important. 172 of goods, passengers, livestock, etc. mail should be shipped in India. Amount may be collected in India or outside India. But 44B la important thing is amount collected in India is important. Goods shipped at any place. Okay. Next. That means collection of income is important. Amount paid or payable by SSCR to the agent to any port in India or port outside India. The amount shall be treated. This is the PGBP income. That's why 44B. 7.5. Tax rates as applicable to non-resident. I have given one classic example. Okay, X 62 years, a non-resident, engaged in the business of shipping. During the previous year 21-22, one of the ships owned by Mr. X collect the freight as follows. On August 6, 2021, a sum of 40 lakhs for shipping the goods from Cochin port. Okay, 40 lakhs he collected from Cochin port. Okay, Cochin port. From Cochin means it is in India. Okay, from Cochin port 40 lakhs. In the demurrage is 10 lakh and handling charges is 60. Can they include into that? Yes. So 39 lakh 30,000, 10,000 and 60,000 is separated. 40 lakhs is the income. Ad hoc 7.5% I will take on that 41.6 including surcharge. Okay. 1,24,800 I immediately pay on departure of the ship. Okay. Next. On Jan 10th 2022 a sum of 25 lakh shipped from goods from Mumbai. It is paid to Mr. X in New York. You pay to his agent or pay to me is irrelevant. 172 will apply if the goods are shipped in India. Shipped or not? Yes. How much? 25 lakh. So 25 lakh. On this, 7.5% 1,87,500. Tax payable is 78,000. Okay. Okay. Now, so 25 lakh. On this 25 lakh, 7.5% came to 1,87,500 total. So 1,24,800 plus 78,000. How much? 2,02,800. Under 172, you will pay. You will pay. I will treat this as an advance tax. Done. 1 year completed. Assessment year came. Now you have other sources of income also. For that you want to set off. Can I set off here? You cannot set off because it overrides all the provisions of income tax. So assessment under 44B for collection of 42,70,000. Okay, 42,70,000. Besides, X collect 42,70,000 in India. 1 second. 42,70,000 in India on March 3rd, 2022. On March 3rd, 2022 for shipping goods from Karachi to California. Karachi to California, if you have, listen, this is very important. Karachi to California, if you have, goods are going from shipped at Karachi, has to reach California, but the amount is received in India. Why people will do like that, sir? Question may arise. Yes or no? Listen, a person may collect revenue in India because he might have expenses in India. I will explain this. There is a shipping company called as ICAl. That company case also happened on this. That particular company, goods shipped at Singapore. It has its Indian operations also. Goods has to reach from Singapore to UK, London port it has to reach. Okay. That same ICAl is also having a Chennai branch is there. In Chennai branch, it has to make a payment to some person. Do you know what they said? This is a Singapore person. He said, you pay in India to my person. We have some expenses there. We will cater. That means goods are nowhere related to India. That even don't touch the shores of India. Ship goes from Singapore directly to UK through a different way. But amount for that is collected in India for incurring expenses within India for their business. That also will come under 44B. 172 will not cover that. Therefore, I will be having for point A 172, point B 172. For this point, mandatory you have to apply only 44B for me. So 44B, collection of carriage made outside India, 42,70,000, ad hoc income 7.5. Here I can apply for set off and carry forward. Barring the cases noted above, X does not have any other income in India. X incurs an expenditure of 2,40,000 in India. Out of it, 65,000 is paid in cash. 65,000 paid in cash means you don't apply section number 43. All those things you don't apply there. 40A, okay, expenditure excess of some amount 10,000 paid in cash, 20,000 paid in cash. Don't apply all those. Notwithstanding anything contained, you can make the payment in cash, no problem. Expenditure of 2,40,000 will not be even allowed. Why it is not allowed? Because 172 if you apply, it will override everything. PGBP also does not apply. So irrelevant information. But brought forward loss is useful for 44B assessment. Okay. So ad hoc income 3,20,250. From that deduct the business loss. Net income is 3,15,250. Tax payable for individual 3,390. So this is a tax payable for individual 3,390 tax payable. Okay, next. Now the question arises, sir, here I am having two assessments. 172 first at the time of departure I need to pay. Second one is assessment under 44B for income which is because of collecting the goods in two different ports which is not an Indian port, but income is collected in India. For that mandatory 44B will apply. Now year completed, assessment year came. Now I will make a reassessment of this. Sum received on the goods shipped from Cochin port 40 lakh, Bombay port 25 lakh, Karachi to California collected in India 42,70,000. Less expenses are not allowable since, okay, expenses not allowable since. So assessment will be made. Sum received on a goods 42,70,000, less expenses. Total profit under PGBP this much. Present to tax 7.5. Business loss is deducted. Net income from the business. Non-resident tax rates will apply. 12,500 plus 20%, 4% cess. Okay. First ad hoc, first 5 lakh 12,500 will apply. Above 5 lakh 20% will apply plus 4% of the cess. 75,972. So the problem is you already paid 2,02,800 under which section 172. Tax level under 44B is 75,972. Tax paid on ad hoc basis 2,02,800. Excess whatever you paid 1,26,828 rounded off 830 will be refunded back to you along with interest under 244A. Okay, don't get confused. This is not assessment years assessment that we made. This is a different income. 44, 172, two types are there. 44B, separately I am forced to do because these are collected in India, but source and destination are not India. Okay, 42,70,000. Later assessment year, again you will do a reassessment type and you will compare whichever is better for you. That's why these are here the advantage is brought forward losses will be deducted. That's one advantage. Another advantage is tax rate is not 40%. Non-resident tax rates will apply. First 5 lakh 12,500. After the total income in excess of 5 lakh 20% with 4% that will apply. Whichever is advantageous for you, you can apply for that. Clear everyone? So this is how we have to assess the income. Remaining another lecture we will cover, and we start in the next lecture with residential status. Okay, important issues we will cover. Hope everyone understood this. If you have any doubts, put in the comments box. Thank you.